Hello and welcome to this stream, and sorry for the delay. I had some technical issues again. I couldn't get my camera to turn on. I'm not the best at this stream, but I'm hopefully going to get better at it. So thank you for your patience. And yeah, I was hoping to get a good hour out of this, so I'm going to quickly rush through. I'm always rushing. I guess that's just the way it's going to be until I find my rhythm with this whole thing. So I hope you've all had a good weekend. It was a good weekend over here in the UK where we're celebrating the Queen's Jubilee, and we've actually got another holiday today, so it's a bit of a quiet, slow start to the week. We've got no data really to note of in Europe, and I don't think we've got anything special coming out in the US. So all my links at the bottom, you've got access to my weekly debriefs, where I just look at the price action, look at the way that the auction's evolving. So you're welcome to go and have a look. Let me just make sure I am. Yeah, you can hear me. Okay. Let me put this over here so I can see what I'm doing, just in case. Yeah, we've got all my links, weekend reading. Good to do some reading over the weekend about what's coming up. We've got like two big data events this week. We've got a big macro event. We've got the ECB who are looking to start tightening their policy. So there's a good link from Nordea and Danske Bank, who are just two venues that I've always gone straight to for all my Euro macro stuff. They're really top-notch researchers, those guys. So and amazingly, it's free. So please click on the links and read up about those things if you want to. Remember, I'm not just trading the S&P, although that's what I kind of that's the front I put up in front of you guys. I am a macro trader. I do trade other instruments. It's getting a bit harder with the stream on top, but that is who I am. That's what I do, and that's how I've done it. So I will be trading into the ECB. If there's an interest, I would love to do a stream on how to trade, European government bonds, auctions, ECB, macro, curves, spread trading. So give me a shout, and if there's interest, I can of course modify a little bit what I'm doing here. At the moment I don't really have many viewers, so I don't know, but we'll see. All right, so I'm going to quickly run through my analysis over the weekend. It's all on my my blog. My blog gives you access to all of my weekend analysis, and I'm also trying to put some trading process in there and explain to people how I take a trade on, how I prepare for a trade. So for example, I've written about how to trade the non-farm payrolls. I didn't trade the non-farm payrolls. I didn't want to trade it because I had to go and spend some time with my family, but also I recognized that it probably wasn't going to give me the best opportunity. And if you have a look on and you click on the link and maybe subscribe, you maybe understand why I was quite happy to sack the day off and head off into a quiet weekend, which I thought might happen. So yeah, that's all in the debrief. I will do that now. Sorry, it's on this trading non-farm payrolls. So into today's debrief, I'll just quickly run through the weekly debrief. At the moment, my blog is a little bit muddled. It's not supposed to be. These are all supposed to be in categorical order, but yeah, I need to figure that one out. Anyway, so let's just jump into the week's review. So if you look at my blog, here I am talking about what's coming up. And like I said, the two big things that we're looking for are the CPI and the US CPI and the ECB. I've got a calendar of events just to give myself, this is something I come back to every day, and that's why I put a link in my daily journal to my weekly notes. That way I can quickly, one click, go back, what's coming out this weekend, any speakers, what's the stuff that might trip me up or give me opportunities. So really, really good. And of course we've got the ECB this weekend, so I put some links for some ECB stuff to read, and also just a little bit, we're only, I think, 11 days away from the Fed. So we just had, last week we had the beige book, so I put some information about learning about the beige book. It's a qualitative analysis of how the economies are doing across the entire United States, where yeah, it can move the markets, and it can influence, because it's something it's something the Fed do in order to help them with their policy decisions. And then I've also put some, we're only a week away from, thinking about the options expiry in the middle of the month. So I just started putting in some information about the gamma from my friends at Tier 1 Alpha. I hope they don't mind. I might throw 2 or 3 clicks in their way, so hopefully they don't mind. But just jumping into the debrief. So last month we ended up breaking new lows, and we are now we broke monthly lows last month, and then we've started to come back into the prior balance area, and that's where the kind of auction is taking place now, just at the lower end of where we had prior balance. So what's the auction doing now? So we can have a look at this graphically on looking at the monthly profiles. So looking at monthly profiles is really, really important, and I've only noticed the other day that my pictures on my blog are very low quality. So for the purpose of this, I'm going to have to jump onto a Evernote. So the auction was contained in the high volume node of the prior month, which was here. So you can see this is where we had prior balance, I think from February onwards, and then basically in May we started breaking down, and we had this big run down to the bottom, and then into the end of the month we had this incredible reversal where we've just reversed. As soon as the options expiry finished, that was pretty much the low, which tends to be the case, and then we've run all the way back up, and we're just trading just below, just inside. We're kind of teasing ourselves in and out of the prior balance, and what happens is that if we are trading in an area which is previously heavily traded, and that is, if you look at this month, this is last week, so this is the first week of this month, so this is this month, we're just trading inside this little upper volume node here, where I've got my squiggly graphics saying two-way. Now when we're trading inside that is a prior area of balance, and when we're in a prior of balance, you expect there to be something similar in the current auction. Not always, but it depends on how the auction develops, but at the moment we're just grinding our way up, and we're feeling our way back up again, and slowly we're just coming up to this high volume node where we've got we've got lots of little areas to be thinking about, and there might be buyers and sellers here for whatever reason, but it's really important just to understand where we are graphically. We are in this prior area of acceptance balance, and we're just trading in it, and we've created this other area of balance which is just a little bit, it's just hanging just below the prior node, okay, and it's leaning towards the prior month's VPOC, which is at 40.15, which is this area here, right? So we're just trading, we're trading inside this little prior node here, and we're just encroaching and being drawn slightly gravitationally back to the previous month's VPOC, which is often the case. Often areas of high volume, they act like a force of nature. They are gravity pulling objects towards them, so that there is an attraction towards that area. And if nothing is really going on, an auction will tend to gravitate towards those areas of prior acceptance where there is being prior acceptance, and that's the way I look at it. So we had a pretty normal distribution in last month. I mean, it was made up with lots of smaller nodes, but last month was relatively normal, but last week's was really a very nice auction, nicely auctioned little bracket where we're contained between the lows at 41.71 where we had a prior gap, and the highs at 41.89, which was done the full set in the real-time session. But we did actually have a break up to 42.02 on Monday, which was the holiday, in very thin low volume, but we never made it up there in the real-time session. So that's the monthly, and we're kind of I'm trading the extremes of this area, and I've already taken a short this morning at the value area here, which was around 53, I think. The volume value area. This is the we've got the value area for the profile. TPO profile and the volume, and I took the trade. I went short at the volume value area high. So at the beginning of the week, I'm looking for high time frame references to initiate my first trade of the week, because I'm putting out feelers out there to see where's support and resistance, where we're finding buyers, where we're finding sellers. We can see that last night we found some buyers, just at the closing swing on Friday, which we'll talk about on a debrief. But it's really, really important to understand, at the beginning of the week, you're putting out feelers. You're going to get some trades wrong, unless you're very patient. It's a bit early. We've got the holiday in Europe still, so we've got quite market sessions. But yeah, I will start initiating my trades, not in the middle of the range, especially when we're trading balance, but the extremes. So I'm looking for, if it's low, a slow moving auction, I will look to fade those areas at the extremes. And if it's, if we've got high volume news driven events, then I'm looking to trade the breakout of balance. So at the moment, we've got nothing going on. I thought there's no reason why I shouldn't take this trade. It's a high probability trade, and I'm going to take the trade, and I'm going to look to trade it back towards the middle of the balance. So in this case, it's somewhere around, taking shorts. I'm looking to get out somewhere above the VPOC. I'm not going to be greedy. I'm not going to trade to the other side of balance. I don't know if it's going to happen. But anyway, all I managed to do is get about 8. I sold 54s, paid 44s for some, and I left a runner on, which stopped me out eventually. But I took the trade because it's part of my trading playbook, and I know that statistically it works for me. I got 2/3 of the trade off, and then I left 4-lot runner, which then came back to a full stop, which was about 4-point loss. But I'd taken already 8 points on 1/3 of the position. So I'm actually up on the day. And this is the lovely thing about scaling in and out of your trades. If you can, exit a lot of your, exit some of your risk very quickly because you've got good trade location, that gives you the ability just to relax and leave the trade to do its work. And some days it's going to work out, and some days it's not going to work out. But the thing is just to be, you're process driven, you do the right things, statistically you understand your odds, you take the trade, and once you're in that trade, you try not to fiddle with it too much, especially when it's quiet. When it's quiet, you just want to leave the trade do its thing. So that's what I did. I was in the trade from 10 o'clock, and I just stopped out on the last little bit not long ago. So I've been in the trade for almost 4 hours. It's sad to see the last bit come back for a stop, especially since it would be on side now, because it just literally popped through, stopped me out for a couple of ticks, and it's come back down again. But that is my trade, and I'm happy with it. And I'm like I said, I scaled out of for 10 points for 2/3 of it, 4 points for 1/3 of it, 10 points for 2/3 of it, and then the last bit got stopped out, which kind of cancels my initial scale out. So I'm up about 10 points on 4 lots, which is fine. Okay, but yeah, just going back to that, scaling gives me that comfort because I went for a run, I just left the trade, came back, and I'm quite content to leave it. Okay, just quickly looking at the weekly profiles again. This is just one step. We're going out, looking back in. Going from a high time frame, going back into thing. I hope you appreciate some of the new graphics that I've got. I spent a lot of time trying to make this as easy for people to follow. I've got these little green blobs for illustrating a normal distribution or a certain area of the distribution. In here we have a multimodal distribution, and I've just done it with using 3 of these little squiggly bell curves, and then I will use yellow for indicating balance and bracketing. Arrows up and down, they are areas where we have an inflection point where I believe that that's an area where I might be looking to take a trade. So I hope this all makes sense. I shall do a key. I will do a key for people. So I'll try and help out by doing that. But generally, what are we doing? We are just last week we traded down. We had this little gap between 71 and 79. We found some passive buyers. We then rotated back up, and we just kept rotating either side of this area of balance. So why is it, why is it a bit obvious? Well, because we're trading in this little prior area of acceptance. And what did I just say earlier is that when we're trading through an area of acceptance, we can accept this kind of two-way action. So don't expect to move heaven and earth. You're not going to get rich. You want to be, you're not looking to get rich schemes in this area. This is an area where the market's finding acceptance. It's historically found acceptance. And when you find that, it's going to probably find acceptance again. So you want to be trying to look for the trades out of balance. And those are the high momentum driven trades. Those are the ones you want to identify the areas of balance, and you want to identify when those things are going to break out using your different tools, whatever it is, market profile, footprints, they're all different tools. It's great to use them together. But when we have balance, and low volatility or declining volatility, which tends to be the case as we move away from out of and into OPEX, it tends to go in cycles. You really want to, and also month ends as well. You really want to, be aware of these areas where you're going to find this two-way action, and you want to be taking profits quickly. You want to be sort of almost scalping the trade. You don't have to be micro scalping. You're not in it for 2 ticks, but you've got 10 points, 15 points. Take it. Today I was on side more than 10 points. I didn't take it. Probably I was being greedy, but because I got out of most of the trade, I just left the runner. What I should have done is not let the runner come back to the full stop. That was probably the mistake. I should have noticed that it was coming back up, especially as a double bottom under the top range. That was a mistake by me, but I was out running when that happened, and I can't make decisions when I'm not at the desk. I was quite comfortable leaving the trade on. Okay, so we are in this area of prior balance, and what I'm trying to show you is that we are in this, prior of acceptance, balance, and what we're doing, we're just rotating. We're just comfortably rotating, and we're looking for us to, maybe reach 4220, which is this little high volume node here, where I've put in key high time free targets. So once we get above there, then we can start looking for a nice run to maybe start repairing this prior poorly auctioned area. Okay, and we've got a lot of poor structure, running up all the way up to 4,400, which would be amazing if it did happen, given the way where we've been. So at the moment we're in balance, and I think we've got the Fed, we've got the ECB, the market is just waiting. We've got the CPIs, so we're starting to get triggers where and what you want also is when you have like a lot of balance in a certain for a long period of time, that's just positioning, just coiling up. Eventually, when a trigger comes along, that's when you can take the big trade. That's when you can have a 100-point day in the ES quite easily. It's been happening quite a lot lately. Okay, maybe not 100 points because you're not going to take from top to bottom. Our job's not to be perfect, but you're going to get like 50, 60 points on a trade, no problems. Whereas now we just got to be patient and take the little, smaller trades. We're trading in and out of balance. That's all, the extremes of balance. So that's all I want to say about where we are, where we've been. We in the prior area of balance. This little area of 3-week balance, which we then broke out of. We left a little gap. We've come back. Buyers are passively holding in that area of that gap where we've got the this little blue marker 72s, and then we're just balancing. So I'm repeating myself here, but it's really important to understand what we are doing here. We are, and how we can better prepare for our days if we can accept and understand market structure and the price action that's likely to follow in those areas. Okay, so here I've also, I haven't done a price action chart like I normally do. I've done it using the profiles. I thought last week was quite important, quite interesting the way that the week played out. It was basically rotating from highs to lows, slightly higher highs, slightly lower highs, slightly higher lows, but eventually we just formed this very nice Gaussian distribution. And I just wanted to show how it played out on the high time frame, just so you can see, like, these are 30-minute TPOs, and you can see how the week evolved. And just going into NFP, how we're near the highs of the week's range. Of course, we were in balance, and of course we could have broken just as easily to the high, but we didn't, and we were just rotating back into balance, into NFP, into Friday. And then to me, when I saw that happening, I just thought, right, okay, this is going to be a tough call. This is just not going. It's very hard for this market to break out of balance unless NFP is going to be a massive surprise. And I know that NFP right now, the actual number is not the key. We're looking more at the inflation figures, like the employment wages, all that kind of stuff, which is also released on Friday. but yeah, the NFP itself is not the big trigger at the moment. So I'm just going to quickly debrief Friday, because that's what I'm supposed to be doing every day. But please have a look at these charts. The resolution graphics are all on Twitter for this day. I'm sorry, I apologize, but my WordPress account isn't allowing me to change the files now that they've been uploaded. I'll have to rewrite the blog or something like that. I'm just making excuses. I don't want to do it. I can't be bothered. You can go to Twitter and find it. And subscribe and follow me, because that would be the easiest way for me to communicate with you. Anyway, this is just the rotations of the day's price action for the week and how we form that really balanced. And you can see like where we absorbed at the bottom, we found some absorption at the highs and the over the holiday, and just rotating in and out. Anyway, these are the key points. Just notice also how the middle of the week, the mid 41.32, just acted as this almost over and under. There were a couple of points where we held in the middle, and and then the rest of the time we were literally just rotating from highs to lows, 80, 90 tick 90 point ranges. But we had a couple of days, Wednesday was one of them, where we held, and that actually gave us a lot of the coiling that was needed to accelerate and trend on Friday, and then we reverse trend back down into NFP, and we carried that move into NFP, and then where we are today, we've kind of just we're just trading slightly above Friday's highs. So let's see, we've got a very, very poor low. I'll bring that out now. So this is I'll bring that now. So let's just have a look at the Friday's analysis, and it's all written down there, all my targets. Please have a look. It's done for my benefit primarily, but you might benefit from just looking at how I am thinking about this. I'm trying to be objective in my analysis. There are no opinions expressed here. I try not to, and if I do express an opinion, I do try to state that. I'm looking at clues. I'm just trying to figure out in real time the probabilities based on these clues that I see during the day. What I thought was interesting, we had this breakout on Thursday, and then we had this pullback which came back to this prior area. That's where we, after NFP, that's where we opened this little, just above this little prior little area of acceptance, where we were in the late afternoon on Wednesday and Wednesday evening and Thursday, and then we broke out after the first hour and a half trade. But I thought it was interesting the way we opened at the mid pretty much into the NFP open, post NFP open, and then we literally didn't do very much. It was just we were stuck in the middle of the balance, and that's pretty much what I said. So yeah, check this out. High resolution images are on Twitter. That's pretty much what I've got to say. Let's just quickly have a look what's happened overnight, because I have written about it in my journal, and if you are following the journal, thank you very much. And yeah, I hope it helps. I explain my trade. I also explain a little bit about my feelings towards taking trades. I have to accept lots of things when I'm trading. One of those is taking and being wrong. I think I spent too many years as a trader being right too often, especially when I was trading systematically and algorithmically. I hated being wrong. I didn't have, I went 3 or 4, 5 months without having a down day. It's just the way it was. I was the casino where I just didn't have down days, and eventually every now and again I would have a down day. Whereas discretionary outright trading, you got a much smaller sample when you're a discretionary trader. You're taking a lot less trades. When you're trading systematically, I was trading hundreds of trades a day and eking out small amounts of profit every day. Whereas discretionary, you're taking 1, 2, 3, 4, 5 trades a day at best, and your sample size. So you will have these bad runs. Algorithms and systematic traders will have bad runs, but they've got such a huge sample that it evens out very, very quickly. Whereas discretion traders, they really feel the pain. And obviously, you're trading a little bit bigger. What did I want to go into now? I wanted to go into today's profile. So just have a look at the overnight. That's not the right one. So earlier today, I was short up here, 50s. I got out of some of it here. It came back and stopped me out, and that's moving back in again. We've got this little area of acceptance up here, and I'm waiting to see on the open, which is in, Jesus, 2 minutes. Okay, 2 minutes. So we've got to quickly run through this. So we've got really poor low overnight, which is here around the 04, 4104s. Where is my profile chart? There it is. Okay. Remember, we're looking and we've got the higher, profile levels in mind. All the levels are written out on there for you guys to have a look at. All opinions are my own. All research is my own. It's there for you to learn from me if you can. And if you can't, then, and you don't want to do that, I'm not here to offer real-time advice to anybody. I'm here to help and guide you build your own opinions and trading decisions. So you're very welcome to have a look, but don't blame me if it goes wrong. Okay. I won't tolerate that. Although I'm always blaming my PC. Is that my daily profile? Control. Why is it not working? Ah, there we go. So there we go. We've got this kind of ledge formed at the top with a little, tiny little tail which stopped me out. Ouch. I was expecting some more passive selling up there, but it looks like somebody managed to break through, but we came back into acceptance again in this little volume node up at the top. We've got this little poor low at the bottom, non-excess low. I think this is, I'm going to look to trade the extremes of the overnight session. And then, of course, this little area here, which is just above, just below the Friday's high at 42. So I'm looking to see if we can trade back below 42, where the singles break happened. I think it's probably around 40. And, I'm looking to take trading decisions based on that. But don't forget, we are trading just with a slight, we're outside of Friday's range, so it's really important to see if we get acceptance back inside Friday's range. Okay, so 40, 39, 40, sorry, yeah, around 41.39. This area here, I'm looking to see what happens. It's in the middle of this little composite profile, bang in the middle. All right, I'm going to go because I need to concentrate, and the market's already open, so I am looking at 40s, and very, very important. And we're probably going to try and take out those 44 lows.
So here coming through from the White House. The White House
squawk.
Biden is to invoke the Defense Production Act to push US solar panel production, and the US is to allow 2-year exemption on solar panel imports from Cambodia.
Okay, I'm actually going to start the live stream now, so I'm a bit late for that as well. So I'm going to stop this stream and then jump on to the live stream. So this was the debrief stream, so I'm going to go and do the live stream now. So if you have been following me, thank you so much. And let's have a good day. Let's have a good week. And remember, we don't have to trade. We just trade setups if the opportunity arises. We accept whatever happens once we've taken that trading decision. As long as we make sure that we make the right decisions when we're entering into a trade, then whatever the outcome is, we can accept. And that is it for this week. This is first session for the week. And I'll catch you for the live stream in about 2 seconds. So thank you for watching, and catch you in a minute, guys.